Hello everybody, DSM here. I just want to make a quick review of the trades and market today. This is the chart of SEARS that went bankrupt today, and I just wanted to share some ideas about this chart with you. At some point, SEARS in 2007, it was trading $145 per share. That was the time they had around 40 million, 50, sorry, $50 billion sales and $1 billion, something around 1 billion. No, it was around 2005, I think. They had around $900 million total profit, net profit, and that was the time the stock went kind of supernova, and it went from 85 $86 to 145 150. So then when the real estate market had a problem, because Sears had a lot of real estate and big stores, they had this problem. But eventually you can see in 2 years came back to $20 where it started. After a bounce, which is usually, it's very common to have this bounce, but the thing is the stock couldn't break this resistance and never went to the top or the high of the chart, and it started to come back. Lampert, he took the company. Let me see if I see. Maybe it was around 2000. I forgot when he took the company. But anyway, um, he merged Kmart with Sears, and all of those stories you can read in articles. Um, the thing was, a couple of days ago, I saw this headline in the news that Sears needs to raise $136 million in a couple of days, or it goes bankrupt. As you can see now, today it was trading at 30 cents, and they couldn't raise that money, and it went bankrupt. The thing was, last year, if you can see this support level 625 here, in October of last year was the maybe the same day. No, it was around a year from now. So it was October 20th. Lampert gave the company, let me see if I can, this is the SEC filing. He lent his own company 100 million in the initial loan and 40 million in the second incremental loan. That was the $140 million he uh, lent his company, and I kind of found this iconic. That $140 million he needed to raise was the uh, money he got loaned from himself. Anyway, the company went bankrupt, and this is an example of a very good and solid company that goes and puts a top, gives you a bounce, and fades and closes below the opening price. So don't think these companies would last forever. For example, when oh, sorry, let me tell you this. Uh, the funny thing about, let me find his quote. In 2017, last year, the CEO of the company was somewhere around here. The CEO of the company went to for an interview in Chicago Tribune, and when reporters started asking him questions about the company, um, he basically they got under his skin and asking tough questions, and at some point he couldn't handle the pressure, and he said, we don't need more customers. We have all the customers we could possibly want. As soon as we start making money, people are gonna say, how did I miss this? I give you my assurance, I am not in denial. And basically, he was talking about why people should invest in this company. If they don't want to invest, we don't want investors. If anybody doesn't like my company, you cannot invest in my company and take your money, get out, and this type of things. So that reminds me about another company that I made a video. I think it was in June or July, and I talked about this type of behaviors from the CEOs of these big companies when they cannot handle the pressure, and when reporters ask them tough questions, they get out of the rail and they start to ranting about, if you don't want to invest in my company, take your money and get out. This company is Tesla, and if you see Tesla's chart, they handled this chart. They went basically after this breakout, they kind of put couple of peaks here, and now in this market environment, Tesla has to pass the test of uh, testing this support, which is very, very, very dangerous test, because if it crashed this test at this level, it would be the next SEARS, in my opinion. And you can see in the news the CEO is doing crazy stuff and acting the similar behavior. So if you don't learn from the history, um, you have to pay the price. Go watch my previous video. I put the link at the end of this video, but watch that video because I try to help those people who thought they uh, the company is lasting forever, or nothing can change their product. It's not about the product, it's not about the companies have a life cycle, and after they reach to the top and they cannot change their business model or manage their products or services, whatever it is, that's the bottom line. You see the SEARS, it went to 30 cents from $150 per share. It's not when these people here they hold their shares and they say, no, it's gonna go back, it's gonna go back, it's gonna go back. It never went to 150. And in fact, it went to zero. And this is something I found interesting and I wanted to share with everybody because some of these new traders, they think, okay, if I got trapped here and bought the stock at this price, if I wait, this is something that CNBC analysts or other mainstream media or these fake gurus might tell you to hold because it will bounce, but it never bounced and it went, in fact it went to zero. So one more thing about this market, uh, as you saw today, SPY had a problem again, closed red. uh, there are more sell-off would come, and be careful, don't take high risk trades, don't follow these fake gurus. They are trying to pump stocks and you just chase them because you think they know what they are doing. No, their main business is pumping stocks. And in this market environment, if you trap yourself, if you go all in, you can easily lose all your money. So be careful these days. Don't try to be a hero. Don't go all in or take high risk setups. So that was it for today. See you everybody tomorrow in the chat room. Have a good night.